Taiwi, Chief Market Strategist with JPMorgan Asset Management, joins us live from Hong Kong. Taiwi, good morning. Thank you for joining us. Are you pleasantly surprised with the ability of Indian markets to ignore bad news? Irrespective of what is happening to China, Ukraine, US or Europe, Indian markets are charting their own course?
Well, I think if you look at India, there are many ways that it's actually a little bit more insulated to what's happening in emerging markets. Clearly, what happened last year was the Fed had a major impact on emerging markets, including India. But I think a number of things have really helped India's market. First of all, RBI has clearly re-established its credibility with both domestic and international investors. And meanwhile, economically, there's not a lot of bad news, although there's not a lot of good news either. So the stability of the economy, it's in a way, a positive. And finally, of course, the market is looking forward towards the elections in 2 months' time. And that, to me, is going to be a key, I think, a watershed for the Indian market.
Tai, a big concern globally is the sluggish Chinese data. How are you reading into it, considering the economic growth now seems to be slipping down? We got the weak HSBC manufacturing PMI reading as well this morning. The factory orders have again shrunk further in the month of March. The policy control on credit and concerns of slowdown, not just in industrial activity, but also in the real estate market, are now growing for China.
Well, that's not a complete surprise to us because we've always been expecting the authorities to focus more on controlling credit growth instead of just maintaining economic growth at all costs. So in that sense, I think the numbers are obviously disappointing, but nonetheless, that's largely in line with our expectation. Now, there is growing expectation that the central bank or the authorities may look to stimulate the economy. In my view, I think it's only plausible perhaps in Q2 when we get more data to justify easing. And also, I think the type of easing that we see is going to be very targeted. It's going to be very, selective rather than a broad brush, 4 trillion yuan spending here and there that we experienced back in 2000 and 2009.
For the first time when Fed used the word taper was in May 2013. That led to a big reset in emerging markets. First time they started tapering was in the month of December, which led to some degree of profit booking. But now that they are committed to follow a proper taper plan, how come it is not having an impact on global liquidity?
Well, I think the fact is the market has been now well anticipating tapering, and the consensus is we are going to see $10 billion reduction in quantitative easing every meeting between now and the end of the year. I think that is largely now priced in. The big question mark then becomes when will the Fed start to raise interest rates, and we got a glimpse of that from Janet Yellen's comment last week. It looks like that we're on track to the first rate hike sometime in mid or late 2015, and therefore I think again that's largely within market expectations. So overall, it's not so much the actual action that's going to drive sentiment, but what the market expect the next step or the surprises are going to be. So in that sense, I think the fact that we've been anticipating tapering for some months now, that's why we've seen limited reaction from the market so far.
So, Tai, what's the sense when it comes to India? Because we've got a big event, the general elections as well, lined up ahead, and globally is, too, there is the Chinese data as well as news flow out of the US and EU, which seems to be impacting us because, we're technically oil importers. Do you think the market would have significant upside from here ahead of these big events lined up? And would we see, fund flows continue into Indian equities?
Well, I do feel confident that foreign investors will continue to invest in India. Over the last 13, 14 years, only 2 we've seen net outflow by foreign investors, and that was in 2008 and 2011. Now, whether we're going to see big upside, I think we need to wait for a couple of things. First of all, obviously the election, as you rightly said, is absolutely critical. Whether the new leading party, whoever that may be, does have a strong nucleus in the coalition, that's crucial. Secondly, we need to see a better turnaround in economic data. We've seen things stop falling, but they're not recovering just yet. So I think we need to have those politics and economics factors in play in order for the market to feel even more confident about the Indian market. And I guess we could see more of that in the second quarter.
Tai, at 6,500 on the Nifty or closer to 22,000 on the Sensex, how does one figure out that is all the good news in the price or not? Because arguably Indian markets also have done rather well in this year.
Well, I think it's very hard to describe exactly what is in the price, but I do think that the market is expecting the BJP party at least winning more seats in the elections. Whether Modi will be able to form a solid coalition, that remains to be seen. I do think that the economics are not necessarily priced into the data because, frankly, we've seen very few turnarounds just yet. Monetary policy-wise, it does look like that the central bank is done for now in terms of hiking interest rates. Again, I don't think the market is anticipating any rate cuts in the foreseeable future unless we see further decline in inflation, which we did get a glimpse of that in the latest WPI numbers.
Do you think one should exercise caution and not carried away in this wave of political optimism, because the India elections have come and gone, and typically we've seen that markets, they always rally ahead of elections and unfortunately they correct after the outcome?
I think it's a fair observation. The reality is, I think there's a lot of expectation built into politics, but at the end of the day, equity markets are a reflection of company profits, and that to me is the most important. So, of course, you may have a political environment that is facilitative of corporate earnings, but that tends to be a short-term impact or short-term, sentiment driver. What's driving longer term are likely to be the economics, earnings expectations. Those are still the bread and butter of what investors should be looking out for.